Hey, Steve Saretsky here. As always, there's a couple blog posts that go with this video. Basically, just released my monthly reports for April. They got the detached report, condo and townhouse report for various areas, and then as well the Vancouver condo report. So you can find a link to all those in the description below. Again, that's going to link you to all the graphs and charts that go with this. Try to make it as detailed as possible. I think those are probably maybe my best reports yet. A lot of time went into them in terms of pulling the data from the real estate board, stat center, grouping it into those charts. Basically, I'm going to break down, in those posts, it breaks down the sales by month, new listings by month, so you can kind of see, and then divided up by the 10-year average, so you can get a very, very good idea in terms of the current market situation, what it compares to on a historical level on the 10-year. As well as I've included the average sales prices, price per square foot, all that stuff for each area. So, I mean, you're not going to get that kind of information anywhere else. So, I highly encourage you to go check that out. Again, it's in the description below. I'm going to start off with the detached market. There's obviously rumblings that the detached market is heating up. So I can certainly attest to that. It is definitely hotter. Again, part of that is seasonal. With the spring market, March, April, May, June, that it tends to be the busiest time of year. So if you look at it again historically, that's when the sales to active ratio is the highest. It's when you have the most sales, and it's generally when you get the highest prices. So as a seller, if you're looking to sell, springtime is usually the best time to do it. So part of that uptick in the detached housing market is a seasonal, but not all of it. So again, if you want to know what the market's doing, people will say, "Oh, Steve, you're becoming bullish." No, my stance has not changed. Again, everything that I give you is factual, and to tell you that the market is not heating up on the detached side would be a lie. So again, this is all short-term stuff. I'm always looking at the big picture. Short-term, the market is definitely heating up. The big thing to look for is the sales to active ratio. And so anytime that goes over 20%, it tends to put a pressure on prices to go up. And anytime you get below, I think it's 14%, is considered a buyer's market. So as soon as you get below that threshold, it's when you can start to, it's got to happen for a couple months, but that's when you can generally start to expect prices to push downwards. There's pressure on that. So we saw that sales to active ratio basically through the fall and winter months being in a buyer's market. It's now indicating that it's back up at 25%, and so that would be indicative of a seller's market. And again, we're seeing lots of, not lots, but we're seeing some multiple offers. Again, it depends on the price point. Basically anything under 1.5, maybe 2 million. Again, depends on the area, but as soon as you get into that sort of higher end luxury market, it's pretty soft. And again, that's a market that depends on foreign capital coming in. So it's the foreign capital is not nearly what it was a year ago. Whether it went to Toronto or elsewhere, I don't know, but it's definitely not where it was a year ago. I can tell you that again from feet on the ground. Go to the open houses, go to the listings. The foreign buyers are not there. It's right now what I see is as locals, as local first-time buyers, mom and pop investors, have a lot of equity in their home that are looking to buy that second condo, or looking to help the son or daughter out, that sort of thing. So, in terms of prices, there's definitely, again, when the sales to active ratio pops above 20%, tends to push upwards pressure on prices. So that's what we're seeing in the detached market. Now, not to say that prices are necessarily going up. Again, at certain price points, it gets competitive, multiple offers. I think in the east side, something like just over 30% of homes actually in Vancouver East detached sold over asking price. So again, that tends to happen when you get multiple offers. So there's definitely some upwards pressure on prices in certain segments of the detached market. And again, that's just where we're at. I'm sure that you'll start to see that sales to active ratio probably teeter downwards in the summer months. Again, hard to predict, but that's exactly what we're seeing right now. Some of it's seasonal, some of it's not. The big thing here is that, although inventory is still up year over year, sales are down about 38%. It's a huge drop off. They're actually below the 10-year average. So, sales there's definitely not as many buyers out there, but the thing that's keeping prices, I guess, maybe sustained or possibly going back up is the drop off in new listings. So, as prices came down, sellers refused to sell, or maybe if you're looking to downsize, the condo market's red hot. So people are basically just holding firm. It seems to be, obviously we're in the middle of a housing crisis. People are just reluctant to sell, to move. There's still the mindset that if you sort of sell and you cash out, you'll never be able to get back in. That's the mindset right now. Obviously agree with it, disagree with it. That seems to be the case because people simply aren't listing their homes for sale, and that's what we see in the huge drop off in new listings. Over to, I guess, the condo market. That's probably more relevant for most people. The condo market is, again, it's extremely hot. The sales to active ratio is above 80% for the Real Estate Board of Greater Vancouver. So that set a new high from last year. So again, the big story here is a drop off in inventory. I think inventory was down over 30% year over year. So last year, everybody was talking about our historically low inventory. It dropped even lower, again, over 30% lower this year. And so that's what's happening. So again, sales are down something like 28% for condos. They're right back at their 10-year average. But the big thing here is that the drop off in new listings. So that's bringing inventory down. So basically, the buyers that are out there right now, I would still say in the condo market, there's quite a bit of demand. There's a lot of fear of missing out still driving that market because, again, it's the first time buyers, local mom and pop investors. What's happening is, the inventory. So you have the few buyers that are going in, the buyers that are out there are all basically running into each other again at the same open houses, the multiple offers. You're seeing it, 2, 3, 4, 5 offers on basically every condo. And so we are seeing new price highs for condos. And again, when the sales to active ratio is at 80%, guys, that's going to put a ton of upwards pressure on prices. So, when the condo market continues to climb is anyone's guess. Obviously, when the sales to active ratio is that high, then every indication would quantify that it should be going higher in the next couple months. But with that being said, like we saw with the detached market last year before the foreign buyers tax in about April, May, is the market reached a price point, it reached a pinnacle that it started to tire itself out. There was just, people just basically said, I can't afford this anymore. So at what point does the condo market reach that point? Like I said, the sales to active ratio is through the charts. Prices are up about 20% year over year. There's going to reach a point where the market's going to tire itself out, but I don't know when that's going to happen. But all I can tell you is right now, based on the sales to active ratio, where the current inventory is at, I don't foresee prices to be coming down in the condo market anytime soon. A lot of indication that based on those numbers, they should continue to climb the next couple months. Again, this is all short-term thinking, getting away from the bigger picture. View hasn't really changed on the market. The fundamentals, other than the foreign buyers tax, really nothing has changed. I mean, in terms of lending standards, again, I've mentioned this on previous videos, something to watch for is home capital. Whether that starts the credit tightening, the deleveraging. As soon as you get that tightening in mortgage lending, that's generally when you start to see prices soften. So, because again, as I've talked about this before, it's really common sense when your wages are stagnant and prices go up by 50% in 2 years. The only way to sustain prices when your incomes are flatter is to take on a bigger mortgage. So you really got to look for the credit to tighten. Not really seeing it yet, but something to watch for. I would say the overall sentiment in the market seems to be that the foreign buyers tax is sort of digested. Here we are 8 or 9 months out since the tax came in. There's a feeling that maybe this is the new high. That, we didn't get the big crash. Prices came off a little bit in the detached, a tiny bit in the condos, and then it was right back up. So it's like maybe this is the new norm. This is just the way it is. Vancouver condo is going to cost you $1,100 a square foot. That's the new norm. Again, not that I agree with that, but that seems to be the sentiment out there. I think it's really interesting to watch because, like I said, all these markets are connected globally. People try to isolate Vancouver and talk about how it's such a beautiful city, but really, global economy is connected. And if you actually look at it, even the stock market, there's a thing called the VIX, which is basically the fear indicator. That is at an all-time low right now. It's at a 10-year low or something like that. So there's just no fear in these markets when money is so cheap and times are good. That's the sentiment in the market, and so people have obviously warned about it. The stock market's at all-time highs. Real estate's getting at all-time highs, and the sentiment out there is that times are good, and that's again what I'm seeing in the Vancouver market. So I'm just going to quickly touch on the townhouse market, I guess, while we're at it. It's obviously a smaller sector of the market, so I tend not to talk about it too much, but sales are down basically in most areas year over year. Inventory has picked up slightly. I think for Real Estate Board of Greater Vancouver is up about 8 or 9%. And so sales are down, inventory is up, but again, new listings have dropped off. And so it's keeping prices. I honestly think that the condo market is starting to push the prices up on these townhouses. And so I would say townhouse prices, again, it depends on areas. I've seen quite a bit of softening in townhouses in like areas like Richmond. But there's a lot of indicators. If you look at the average sales price, which is real-time data, the trend certainly seems to be up. So, I would say for the most part, if you want sort of a summary on the April numbers, what we're seeing in the spring is definitely seasonal fluctuations where we tend to see an uptick in not only sales, but in sales to active ratio. It's the busiest time of the year, so prices certainly look to be, they have been going up. But again, with the detached market, it's still below its peak levels. But it has made up some ground here early in 2017. Again, whether or not that continues is anyone's guess. I don't time markets. But all I do is provide you the information. So, again, people go, oh, Steve, you're talking up the market. I'm not talking up the market. I just like to provide the stacks, factual stuff that's actually happening. Again, I'm still pessimistic on the long term of the market. Short term, it seems to be going up. That seems to be the trend. So we'll see how the May numbers shake up. I don't expect a whole lot to change again until sort of these global factors start to play out, until credit starts to tighten. We'll see how Home Capital Group plays out, whether that transfers into the alternate lending space. But early indications are there's definitely some concern with Home Capital. Again, a lot of my clients are in the investing world, very connected inside information with banks. Some of them work at banks, etc. I'm not going to get into the details, but there definitely is a little bit of concern in the banking industry. People are definitely talking. There's been some tightening there, so we'll sort of keep an eye on that. But so anyways, hope that helped. You can feel free to leave your comments in the below. I'll try to get back to them. If you have any sort of information on stats for certain areas, I'll try to touch on those again. But I highly encourage you to click on the links below in terms of going and check out those blog posts, because those are going to have really all the graphs and the data to really follow. That's pretty much it. If you want to subscribe, that always helps. Thumbs up, appreciate that. And I'll see you guys soon.